Hi, friends. Welcome back to another exciting and action-packed live trading session. I'm so glad to have you here with me again. In today's video, we're diving deep into BTC trading using a powerful and super simple method, trading with levels. I'll be showing you how I identify these key levels in real time and use them to plan my entries and exits with precision. Now, if you've been following my channel, you might remember the Stochastic RSI hack strategy I shared recently. It's a clever little trick that helps spot potential market reversals and entry zones. If you haven't watched that video yet, I highly recommend checking it out. It's a game changer for traders of all levels. The strategy I'm using today builds on that concept, which makes it even easier to catch those perfect entries and secure timely exits. This approach is not only beginner-friendly, but also incredibly effective if you're into scalping or short-term trades. So grab a cup of coffee, sit back, and trade along with me as I break everything down step by step. Let's learn, trade, and grow together. You don't want to miss this one. All right, let's get started by adding the Stochastic RSI indicator to our chart. This is going to be the main tool we'll use for spotting precise entry and exit points. Once you've added the indicator, we'll make a few quick but important tweaks to the settings so it works exactly the way we want. First, go into the Style tab of the indicator settings. Here, simply uncheck the Cent D line. We don't need it for this setup, so removing it makes the chart cleaner and easier to read. Next, adjust the overbought and oversold levels. Set the upper limit, which marks the overbought zone, to 80, and the lower limit, which marks the oversold zone, to 20. Now switch over to the Inputs tab. Here, update the following values. RSI length, change it to 2. Stochastic length, also change it to 2. Once you've done that, click OK to apply the settings. Now here's a neat little trick. Move the Stochastic RSI to the same pane as the price chart. Just drag it into the existing pane above. What this does is overlay the Stochastic RSI directly onto your price action, making it easier to visually spot signals right where the price is moving. Finally, don't forget to turn on the auto feature for both the Stochastic RSI and the price chart. This will automatically adjust the view to fit all the data nicely on your screen, so everything looks clean and is easy to follow. And that's it. Your setup is all done and ready to go. Now you're all set to spot some great trade opportunities with this clean, powerful setup. All right, now let's move on to the most exciting part, identifying the key levels for our trades. Don't worry, this part is super simple and really fun once you get the hang of it. To begin with, we're going to look at the Stochastic RSI overlay we just set up. Our goal here is to spot points where the Stochastic RSI forms horizontal alignments. This is a strong clue that a price level is significant. For example, right here you can see a clear horizontal pattern forming. The Stochastic RSI is touching the same level multiple times. This is a strong signal that the market respects this level. So let's go ahead and draw a horizontal line at this exact spot. This will be our first key level. Now, look a little further along the chart. You'll notice another area where the Stochastic RSI is lined up horizontally. Perfect. This is our second key level. Just draw another line here. We've now marked our key support and resistance zones. These are the areas where price is most likely to react and where we'll look for trade opportunities. To make everything more visually clear, I'm going to do a bit of cleanup. I'll change the color of the overbought and oversold lines so they stand out better. I'll also increase the thickness of those lines so they're easier to see at a glance. And finally, I'm going to change the background color to a soft yellow. It just makes it easier to focus on the price action and indicator levels without straining your eyes. And that's it. We've now got a clean, powerful chart set up with our key levels clearly marked. We're all set and ready to start taking trades. Let's dive in and see how the price reacts at these zones. Now that we've marked our key levels on the chart, let's understand what they actually mean and how they help us in trading. Take a look at the chart again. You'll notice there's a dotted line at the top and another one at the bottom. These are the overbought and oversold zones, and they play a very important role in our decision making. Let's start with the upper dotted line. This marks the overbought zone. Whenever the price or the stochastic RSI reaches this area, it's a strong sign that the market might be overextended to the upside. In simple terms, it means buyers have pushed the price up too much too fast, and there's a high probability that a reversal or pullback could happen from here. On the flip side, the lower dotted line marks the oversold zone. When the price enters this area, it means that sellers have likely overdone it, and the market could be due for a bounce or reversal upwards. Now, here's the important part. Even though these zones might look tempting, I strongly recommend that you avoid taking trades when the price is in either the overbought or oversold zone. These are considered high-risk areas because the market can behave unpredictably here. It might reverse sharply, or it might keep moving in the same direction, trapping traders on the wrong side. So as a rule of thumb, stay away from taking entries directly in these zones. It's simply not worth the risk. Wait for better confirmation near the key levels we've drawn where the stochastic RSI aligns with price structure and the odds are more in your favor. Let's shift our full focus to the most important area, the yellow zone. This is the safe zone for trading, and it's where we'll find the highest probability setups with the least amount of risk. Why is this yellow zone so special? Well, it sits between the overbought and oversold levels, which means we're avoiding those unpredictable high-risk areas at the top and bottom. In this middle zone, the market tends to behave more reliably. It gives us better chances to plan our trades with confidence. Now let's take a closer look at the chart. For example, right here, notice how the price makes a pullback or a reversal and then crosses back below the dotted line and through one of our key levels. That's exactly where we look for a sell opportunity. Once that confirmation happens, we can enter a short position and aim to take profit at the next support level or the next dotted line below. This gives us a very clear entry and exit plan. Personally, I love trading between the key levels. This zone is much more stable and the signals tend to be more reliable. When the price is moving within this range, we avoid emotional trading and instead make smart, well-timed decisions based on structure and logic. So remember, stick to the yellow zone, wait for price confirmation, don't rush. Enter trades between key levels, not inside the overbought, oversold danger zones. This is where you'll find the cleanest entries and the highest probability trades. All right, just like I mentioned earlier, the key to this strategy is simple. Always take trades within the yellow zone and be patient for price confirmation before entering. Now let me walk you through a live example of how I applied this. Here, you'll notice the price bounced from the oversold zone, which is a strong indication of a potential reversal. But I didn't rush into the trade. I waited for two clear confirmations. One, the price crossed above the lower dotted line. Two, and it broke past the key horizontal level that we had already drawn earlier. Once both conditions were met, I confidently entered a buy trade. Now, when it comes to taking profits, I always like to keep things structured. My personal rule is to take profit at the next key level. So I set my target right at that level, and this trade gave me a nice clean $540 profit. Let's talk about stop loss. If you look at this lower area on the chart, you'll see that the price bounced multiple times at the same level, forming a strong support zone. That's exactly where I placed my stop loss, just below that support. It's logical, it's safe, and it gives the trade some breathing space while still managing risk. Now, here's what I love most about this strategy. You don't need to worry about market noise or sudden volatility. Whether the price moves quickly or slowly, it almost always travels from one key level to the next. That's the true beauty of this method. It's simple, structured, and surprisingly reliable. Stick around until the end of this video because I'm going to show you my P&L from the last 2 days where I used this exact same strategy. You'll get to see how consistent and powerful this approach can be when you follow it with discipline. If you're trading using levels like this, I highly recommend using a widescreen monitor. It gives you a better view of the price movement across a wider range, and makes spotting levels and patterns a whole lot easier. And look at that. The price just hit my target perfectly. Trade closed with a $540 profit, exactly as planned. You can clearly see how the price respected the key level like a charm. All right, let's go ahead and take one more live trade together. This time, we're going for a sell trade. I want you to really see how this strategy works from both directions so you can understand it clearly and confidently. Take a look at the chart right now. You can see the price moved up, and touched the overbought dotted line. And right after that, there was a pullback, just as we expected. Then, most importantly, the price crossed below one of our key horizontal levels, a level we had drawn earlier based on previous price action. This is exactly the confirmation we were waiting for, so I've taken a sell position right here. As for the targeted profit, I've placed my take profit at the next key level below. If all goes well, this trade should give us a nice return of around $490. Now, while we wait for the price to reach target, let me share something really important about this strategy. One of the biggest advantages of trading with clearly defined levels is that it removes guesswork from your decision making. You're not reacting emotionally to every candle. You're following a structured game plan. Whether you're buying or selling, your trade is based on price touching key reversal zones, overbought or oversold, waiting for confirmation through level break, and targeting the next logical support or resistance. This approach brings consistency, which is the most important trait for any trader. All right, back to our trade now. Look at that. The price is approaching the target. Just a bit more. And boom, target hit. We've just locked in $491 in profit on this short position. This is exactly why I love this strategy. It's calm, calculated, and doesn't depend on chasing the market. The price simply flows from one key level to another, and we ride along with it. For the past 3 days, I've been consistently using this exact strategy in my trades, and honestly, the results have been really impressive. On average, I take just 4 to 5 trades per day, and that's more than enough when you're trading with a solid plan like this one. It keeps things focused, stress-free, and profitable. And that's a wrap for today's live trading session. I truly hope you enjoyed watching it and picked up some valuable insights along the way. If you found this session helpful or interesting, please take a moment to show your support. Subscribe to the channel so you never miss a future update. Like the video if you enjoyed it. Drop a comment below if you have any questions or want to share your thoughts and want to share it with trading friends. Thanks for watching, and I'll see you in the next video. Until then, happy trading and stay consistent.